This conference will now be recorded.
And so eventually your statements will look like an income statement, sales less cost of goods sold, operating expenses, net income before taxes, net income. So we're coming to here. That statement of retained earnings, the earnings you have, add the net income less the dividends, how much of the retained earnings that you keep in the business, and then your balance sheet. The income statement is for a period of time. The balance sheet is as of a particular point in time, given all the revenues that you earn, all your income, what do your assets look like? What do your liabilities look like? And what does your total liabilities equity look like? And we always said that the assets have to equal the liabilities and equities. And so we went through a process of getting to where we are now. The first week we worked on steps 1 and 2, analyzing transactions, making journal entries. Last week we posted to the ledger and did a trial balance. And at the end of last week, we prepared financial statements and closing entries, step 7 and steps 8. We skipped steps 5 and 6 because they, at times, they'll throw us off and we want to get 7, 8 in. And we'll come back to 5 and 6. But at times, adjusting entries give people problems because when we do adjusting entries, I don't tell you the amount. See, right now, you've made journal entries and posted to the ledger, but I've told you everything. And so you'll have to do some thinking here. And so I don't want to mix that in. So I just want you to be able to go through 1 through 4, 7, and 8. Are there any questions? Are there any questions? Well, maybe y'all ready for a quiz today then. Yeah. Can everybody prepare these statements? We ready, Darius?
Ain't nobody ready for no quiz. No, we're not.
You're not. Crystal is.
I like a challenge.
See, Darius likes a challenge. What about it, Chris, who's not going to miss any more classes? Sam, how we coming?
I finished all 40 journal entries. I just have to do the trial balance and all that.
Okay, so he's doing 40. That sounds good. If you want to do 40, that's fine. Effie, how we coming?
I did the journal entries. I just need to do the trial balance also.
Roquel?
Same. I'm doing everything.
Okay, y'all doing everything. So are there any issues with journal entries? Are there any issues with journal entries? What about posting to the ledger? Preparing a trial balance? Preparing an income statement? Any issues with that?
On my 40 journal entries, I'm having, I don't know what's wrong. I done went back and double checked 5 different times and I'm not going back to check again. But my total assets and equity and the little total assets at the bottom and the total equities and liabilities on the other side, those 2 bottom numbers not adding up and I don't know why. Everything else is adding up and I'm not going back to check again because that's just too much.
Oh my, oh my, oh my.
I don't know why they not adding up because all of the numbers are accurate.
Well, they're all accurate. They be added up, Deputy.
Well,
There's
they not.
probably a simple reason for that.
I even went through it with Darius, and mine's matches Darius's completely, and my numbers still don't add up. So I don't know. Once me and Darius went over it, and they still didn't add up, but that's my last time. But
Oh. Okay. So what we're going to do is to go back to that illustration problem. Because when you have 40, sometimes things can occur. And so we're going to look at those 10 journal entries, which I asked you to do. And we're going to work the 10 journal entries and go through the entire process with just 10 journal entries. And then if we can do it with 10 journal entries, we should be able to do it with 40, making sure that we did not have an issue with retained earnings, that the balance sheet has the new retained earnings, not the old one. And so most times it's just a simple thing there sometimes.
yes, on my 10, the 10 or the 13 or whatever one we just turned into you last night, that one balanced. It's
Then
fine.
back.
I know how to balance it. It's fine.
Well, we'll
I
just
even
work on
went
40
and
later.
put,
So you turned in 13 for me?
yeah, I turned that in already.
Okay.
It's balanced.
You turned in yours, Crystal? Since you reminded me, okay. So let me go on the blackboard and let's look at that one, because that's what the midterm looks like.
What do you expect? The whole lifestyle is fast and furious. The bills, the disco, the playing cards, wow, everything's dangerous.
So let's see, let me get in here. So I have 3 financial statement homeworks turn in. And so what we need to do is just
Shut up, you know my dad.
who's making all that noise? Okay, so this was 13 journal entries. So let me go to assignments. So is this the 13 here? Beginning with the
Yes.
40,000. Is this the right one?
Yes.
Okay. So we have here 13 journal entries for you, and we worked on these before, and we simply wanted to go through the entire process to make sure that we could work with 13 journal entries. And then once we work with 13 journal entries, then we'll work with the full amount. So this is what your grades are going to look like. Where I've got everything listed, and it'll be anonymous in terms of once I get it finished, but I put down the grades for everything, and then you see the grades, your grades, as well as everybody else's. And if there are any issues or problems, let me know. If there's a mistake and you've got points, I want you to have your points. That's why I'll send it out to you, so that to make sure we can get that corrected. Now, let's see if we can pull up an Excel spreadsheet to work this problem today. So how's Excel coming for everyone?
Mine's works straight. I didn't think I had the option when I was adding the parentheses after my journal entries. I don't think it gave me the option to still go ahead
Okay,
and do that part.
we'll
Unless
let you explain that to us. You and Dominic, so that sounds good.
What's the difference between the temporary accounts and the permanent accounts? Because I don't know where common stock goes.
Okay, that's a good question. Let me get this saved. So this is a problem. So I'll just take all of these out, and we'll work it on this. I think this is our original 40 with 20, first 20. So the question becomes, as was asked, and that's a good question, what's the difference between permanent and temporary accounts? It's probably not the best example. Let me just see if I can find. I cannot find what I want. Okay, what I need to pull up, let's see if we can pull up. Okay, let's go back to this chart of accounts. Okay. Permanent entries, permanent accounts, started assets, cash, and it goes to retained earnings. So retained earnings is the last permanent account, okay? So all the accounts from cash to retained earnings are permanent. That means they carry over. From dividends, income summary, all of the revenue and expense accounts, they're temporary. They're actually temporary retained earnings accounts. We could have just debit and credit the retained earnings, but it'd be very difficult to get our financial statements prepared. So the way to look at retained earnings is the revenue minus the expenses minus the dividends. We put them in separate accounts so we can get the financial statements prepared. And then at the end of the day, we prepare closing interest and close all of these accounts out into retained earnings. So every account from dividends, income summary, their summary account, and all the revenues and expenses are temporary accounts. So are we clear now on what's permanent and what's temporary?
Yes, sir.
Okay. So when you do your spreadsheet, when you're doing your spreadsheet, then what you want to do is, this doesn't reflect it, but we copy. Anything temporary you want to put down here. So I'm going to put dividends here. And I'll make this an income summary. Okay. So permanent accounts, they're going to carry over. Let me just clear this one out. I'll make this retained earnings. And I'll make this common stock. Okay. So this setup, is very important as we, lay things out. And I'll just put accounts payable here. And we'll put notes payable here. So any questions on how this should be looking, how your spreadsheet should be looking? Okay, so let's go then and take our time and make the journal entries. And then post them to the ledger. So what we want to do is to make these journal entries and then post them to the ledger, these 13 journal entries. So most people are good at this, so why don't we go ahead and do them? And so journal entry 1 is what? Debit cash, credit what? Common stock. The debit's 40,000. The credit's 40,000. Then we go to our T accounts. Okay, so we can put the 40,000 in like this. parentheses. Is this how you did it?
But it wouldn't give me the option to do the auto sum.
Say what now?
It wouldn't give me the opportunity or the option to do the auto sum.
It wouldn't. It wouldn't do that.
I had to calculate it manually.
Oh, we don't want that. So another thing we can do then is just go into another cell. I don't want to move over from it. I don't know why I put a -1 there. Let me see if I can try it again. Why don't we try it this way then? Okay, so let's see if it'll stay. Okay, stay there. So what we'll do is I'll put the 1 in this little box here. Does want to act up today for some reason. Sometimes there are formulas already in, and it doesn't want me to. It is continuing to do that. What I'm going to do is see if I can create me another cash account. Nice. Oh, it's acting up today. Finally, it lets me clear the contents. Okay, so I'm gonna see if I can put 40,000 in here again. Then what I'm gonna try to do is to go into this A cell here and put the 1 in and I'll put it in red. Okay. So all I am is I'm in another cell now in terms of where I'm indexing at. Okay. So hopefully we're clear now. So let's go on to what happens in journal entry 2. Purchase inventory and cash.
So I put inventory on top 120, inventory debit 20,000, transaction 7, my bad. I put cash for the credit of 20,000, account number 100.
And that was 20,000. I won't put the, you should be putting those in as we just try to get through. And just put them in, then let's go ahead and post this. So this becomes 20,000. This is transaction 2. And we have inventory debited. Okay, so let's see if we can auto sum now. So we're gonna go here and auto sum. Auto sum here. Then we'll put in our formula equal parentheses minus. Okay. So you can see you got other cells on the side. So simply you just do that in those cells, on those small cells on the side. Purchase inventory on account 60,000. Debit inventory again.
Yeah, and then credit 301 accounts payable, 60,000.
So let's go ahead and post that one. On and out of some this to here. Okay, then we borrowed 60,000 as a short-term loan. So we're gonna debit.
We're gonna debit cash,
Or we're gonna credit.
notes payable.
That's 60,000 also, correct?
Yes.
And so now we come back to the T account. So we'll put the 60,000 in for cash. This is number
4.
and we need to go to notes payable, put a 60,000 in. Okay. Then we paid our dividends in the amount of 10,000. So we're debiting dividends, crediting cash. And so let's see, we can post that one. So dividend should be over here. And we're going to come back to cash. So, you know, once we get going, it's fine. You just have to get going with the Excel, but hopefully you can see it will make our work easier. 6, we purchased land for $250. Paying what, $250 down?
Yeah. And then cash.
50 down.
Cash for 50,000. And then notes payable for 200,000.
So let's see, we can get that one posted. So we just make this land here. And we need to go to notes payable for 200,000. Then we paid salary expense of 40,000. So sales salaries, so it's debit sales salaries. So let's move that T account. I don't go back and correct this posting here, what's gonna happen? I won't balance. Paid advertising expense of 20,000. Number 8 here. We'll just make this advertising. And this is 20,000. Cash car rental revenue received. Finally, some income. So we're going to do what? Debit cash.
And credit sales.
For 100,000. So let's go and post that. Number 9. Then number 10, cash car rental revenue earned from corporate customers. What type is that?
$15.
That's a 15. So every now and then, see that, Chris? So when we make the sale, we debit the receivable. You see that, Chris? Because when I've been grading yours, you've had some issues here. Sometimes you're crediting receivable or something. So when the revenue is earned, we debit account receivable and credit sales. That's 30,000. Then let's go and post this to the T accounts. Let's see. What I can always do is insert another column. I'll just try to keep track of them, but we could put another little column in here. But we'll assume we're keeping track of them. So we're going to debit account receivable 30,000 and credit what? Sales 30,000. So I got room here. So okay. So I'll just put the 10 here. but we could just put another little column in there if we needed to. Probably on a lot of transactions, just worth it to put it in there. I won't worry about it now. Okay, so then this is all of our sales transactions.
So everything under,
Everything what now?
oh, I forgot my speaker was on, I'm sorry, but everything under retained earnings is the temporary accounts, correct?
They're temporary retained earnings accounts.
Okay.
You see, retained earnings is sales, less expenses, less dividends. We could put all those items in retained earnings, but we would not be able to prepare the statements easily. So we put them in these accounts temporarily until we get the financial statements prepared. Then the impact of all of these items are going to end up in this one account. Okay. Number 11, we paid on accounts payable $25,000. So let's go down journal entries. So we're going to debit account payable. And credit cash for $25,000. Okay, so let's see if we can get that posted. Credit cash for $25,000, then we're going to debit accounts payable for $25,000. So if we want a balance, what would our formula be to get the balance in accounts payable? Can anybody give me a formula?
Equals, open parentheses,
Equal,
open parentheses, and then I will click on the 60,000 and subtract it from the 25,000. And then close parentheses and hit enter.
so if we just had these now, if we had more than one, we'd have to go through and get our subtotals and then put that formula in. But just want you to become comfortable getting your formulas in and getting your balances in T accounts. And then you won't make any errors as you try to balance out. Collection of cash from corporate customers. So at this point, Chris, what's the journal entry going to be? We're going to debit cash.
Yeah, you're gonna debit cash, and this is for number 12. Yeah, and credit accounts receivable.
So you see, we have to have the 15 first, then we have a 3. In the 15, we create the receivable. So that's, and then in the 3, we get the cash and credit receivables. Okay, so but if you debit cash or don't debit receivable in this transaction, then when you make this journal entry, it ends up negative. So receivable should not be ending up negative. So you see that now? Okay. So let's go to our T accounts. So we're getting cash of 20,000. Transaction 12. And now we're crediting receivables for the 20,000. And to get our formula in, we can just say equal, get parentheses. Wait a minute. Click on this, minus this, parentheses. So you see that calculates this for us. So all we did had equal, parentheses. We clicked on this, put the minus sign in. We clicked on this, put it back in parentheses, and it does the balance for us. Is there any question in writing these simple formulas? We got one left. We have one left. So let's see if we can make the journal entry. So when we pay on the note payable 10,000 and interest 10,000, we're paying total what, 20,000. But we're going to debit the note payable. We're going to debit interest expense. Both of those are for 10,000. Then we're going to credit what? Cash for 20,000. So I'm going to go down here and I'll put interest expense here. So that'll be a debit of 10,000. We're going to go up to the note payable. I'll put it here, I guess, 10,000. 0. Then we'll go here and auto sum it. And then our balance is going to be what? Equal, shift parentheses. We're going to click on this column here. Since that's a normal balance, we're going to click on the credit amount minus so there we have our balance. And we need to go up here to cash. We run out of lines. So let's just see if we can insert entire row. Okay. So it inserts an entire row for us. And I'll just stick it in here. $20,000. This is for Are there any questions on the journal entries or the trial balance? I mean, or the ledger? Any question by anyone? Given this ledger, I now want you to prepare the trial balance. So I'm gonna give everyone 10 minutes to do me a trial balance if you hadn't done it. Okay? You're only using one item, the balance in each account. So I'm putting them in red. There's only one transaction. I could put totals there, but I'm putting them in red for you. Okay, so I'm giving everyone to prepare me a trial balance in appropriate order based on the accounts. So let's see if we can take 10 minutes and get that trial balance prepared in appropriate order.
This conference will now be recorded.
Okay, is my trial balance prepared?
Yes.
What's going to be the first item on the trial balance?
Cash.
How much cash we got?
We have 220. $120,000 is being debited.
How much cash do we have?
Mine says cash, but it's 35,000 being debited
So let's look
on
at
my
what's
trial.
happening here. 220
That's
are the
35.
185 are the credits. We have in the account 35,000. So that's why I put these numbers in red. This is the number that goes on your trial balance. Okay?
35.
Do we all see that?
Yes.
So cash should be 35,000. What's our next account?
Accounts receivable.
How much is accounts receivable?
10,000.
Next,
Inventory.
how much is inventory?
80,000.
Next,
Land.
how much is the land?
250,000.
How much? 200?
250.
Okay. Is that all of our assets?
Yes.
Then we move to what?
Accounts payable.
Those accounts payable. How much is accounts payable?
Accounts payable, I got 35,000 credited.
Okay, so that's 35,000. Notes payable,
250,000 credited.
and what comes next?
Common stock for 40,000 credit.
And then our last permanent account is what?
Dividends for 10,000 debit.
No,
Oh, retained earnings, but that's zero. That don't really count.
that's our last permanent account, and right now it has a zero balance. Now so I'm skipping a line. We're going to now move to our temporary accounts, which will all be closed out. The first one being what? Dividends. How much is dividends?
$10,000.
Okay. Then we're going to move to what? Sales. How much were our sales?
130,000.
Then our expenses, what were they?
Advertising expense for 20,000. Office salaries expense for 40,000. And the interest expense for 10,000.
So our advertising expense is what, 20,000?
Yes, sir.
Sales salaries, was 40,000. And finally, our interest is what, 10,000? So are we in balance? Ought to sum our debits. We are in balance. So all we did was to get this trial balance was to go to the T accounts and pick up the balance of each account. When there are debits and credits, we add up the debits, we add up the credits, and take the difference, and it goes on the side of the larger. Okay, the balance is on the side of the larger. Inventory just had two debits. Notes payable, the credits were larger. So it's on the credit side. Are there any questions on how to prepare a trial balance?
Yes, sir. I have a question.
Okay.
For the retained earnings, are you expecting for us to put the zero in there, even for like the next couple assignments we do?
Yes.
Okay.
Effie, how we coming?
It was good. I did all the totals right except for cash. You know, I've been having a hard time getting my cash to balance. But it's
What you
because
gonna
I
do when
put
you get a lot of money? What you gonna do when you get a lot of money?
hire somebody to do this for me.
Oh, you gonna hire somebody to do it for? So let's work with it. So all the hard work is done, right? So all we got to do is get our sales now, copy it, paste it. And since we don't have anything else, any cost of goods sold, we paste it there too. So that's our sales. As we get ready to do the income statement, remember the income statement, we do it sales down. Now we're going to pick up our 3 expenses. And we'll put them here. So those are the 3 expenses. Then we come and get the amounts. Then we want a subtotal here. And so we'll just say simply it's going to equal that. So we just put in an add formula. Equal this cell plus this cell plus this cell. And now to get our net income, we're going to do what? It's going to equal what? The gross margin minus our subtotal for expenses. We now have the net income. Our beginning retained earnings was 0. So this is the income. Now we're trying to determine how much we kept in the business. So the net income, whatever we have here, we can copy it and paste it right here. Not pasting, so some formula must be in here.
I need to resubmit the homework. Um, should I just email it to you?
Did you submit it at all?
I just submitted it, but I submitted the wrong version. I forgot to save.
All right. So we're gonna put our net income in, less dividends. We're gonna go here, get these dividends. Let's copy them, see if it will paste. And then ending retained earnings is always gonna be equal to, and we don't have a beginning retained earnings here, but it's this cell plus this cell minus this cell. See if it does it for us. So we just put in a formula, beginning plus the net income minus dividends give you ending retained earnings. So my concern is I'm hoping that everybody is able to utilize Excel and that it's helping you. So the income statement shows how much income we had. Then the statement of retained earnings shows us how much of this income we kept in the business. Now we're ready to do a balance sheet. Can we do a balance sheet? We're going to take our assets. And we'll do it in more detail later, but we're just trying to get them in here now. Then we get our dollar amounts. And we auto sum these. Our total assets is 375,000. So this number needs to be 375 also. Okay, so let's get our liabilities. Accounts payable, notes payable, copy that. So here's accounts payable, notes payable. Then we're going to come and pick up the amounts. And we're going to auto sum them. So our total liabilities is 285,000. Now we need to get our stockholders' equity. So we're going to go up here to common stock. 40,000. We'll see if we can copy it and paste it. And key thing for retained earnings, we want to go here to this new ending retained earnings. We calculated it. Want to copy it. It's got a formula in here. Undo. I better just put it in here. It could be a pre-existing formula. 50,000. Okay. So a key thing here, you've got to put in your new retained earnings if you want to balance. And so our formula now is going to be equal of liabilities, which are here at 285, plus the equity, which is 90, and these two numbers are the same. So you see that, Dominique?
Yes.
Now let's make our closing entries and post them, because right now retained earnings has a balance of what? Zero. And so we got to close out all of these accounts and get a new retained earnings. So I'm going to just put the closing entries here. So you get So you got a better reference on where they're coming from. Okay, so closing entry 1. So we're ready to do closing entry number 1. And we're going to so this is closing entry number 1. And in making this closing entry, make all of these. So in closing entry 1, we close out the revenue. So we're going to debit sales, and we're going to credit what? Going to credit income summary. So the first closing entry is always the sales debited, income summary credited, and then we post that to the ledger. So sales are debited, and now that account is zeroed out, and income summary is credited. So that's closing entry 1. Let's just say maybe I use Roman numerals for these to indicate that they're closing entries. Our second closing entry, we're going to close out the expenses. So I'm going to make that Roman numeral 2. So the second closing entry, we close out the expenses. So what we're going to do is now we're going to debit these expenses.
Income summary.
You're right, debit income summary, excuse me. So we're going to debit income summary. And that's going to be the 70,000. Then we're going to credit these expenses to close them out. As well, then we can copy these. So that's closing entry 2, where we're closing out the operating expenses. So now we need to go and post these. So we're going to debit income summary for 70,000. And this is closing entry 2. And we're going to credit each of these accounts, expense accounts, so 40,000. And all of these represents the credits for closing entry 2. And I'll just put it here. Closing entry 2. So once we've done that, then all of these accounts have been zeroed out. Now we need closing entry 3. And what's closing entry 3?
Retained earnings.
Closing entry 3. And I put it here to let you know that the amount is the net income. So we're going to debit what?
Income summary.
We're going to credit what?
Retained earnings.
So the amount is always the net income. If you had a loss, these would be reversed. So let's go back and post the 60,000 to our T accounts. So when we post the 60,000, we're going to debit 60,000. So this is closing entry number 3. And we're going to credit retained earnings for the 60,000. So this is closing entry number 3. So retained earnings now has 60,000 in it. Now we need, and of course the income summary is closed out. The debits equal the credits. Now we need to make closing entry 4. And closing entry 4 is going to be what?
Retained earnings and dividends.
Closing out the dividends. So we're going to debit retained earning. And we're going to credit dividends. for that $10,000. Now we need to go back and post that. So when we go and we post that, we're going to credit dividends for $10,000. And this is closing entry number 4. And we're going to go up here and debit retain earnings. I'll move it down so I can get the 4 in here. So what's our balance in retained earnings going to be now? And so that 50,000, which is here, which should be on your balance sheet now, occurs after we make these 4 closing entries. So after we make these 4 closing entries, so these entries stay the same. We close out the revenue, we close out the expenses, we close out the net income, we close out the dividends. Are there any questions? So once this has happened, then all of these accounts are gone. So that's a good way to say it. They no longer exist. But then we have in retained earnings now no longer 0, but we have $50,000. So after the closing entries, I just kind of put it here on the side in parentheses. We have a retained earnings. We don't need these other accounts anymore. They've served their purpose to help us get these statements prepared. Are there any questions? Are there any questions? Well, I won't be talking tomorrow, so you know what that means, don't you?
We're gonna have an exam.
So what?
Tomorrow we have a quiz.
Well, we just have a problem with working class. I can see how everybody's coming.
The document that we just worked on,